Hey gold friends, just got back from a beautiful run. It's a nice sunny day, and I just want to make sure that you guys are at least thinking about taking care of your physical self as well as your mental self. Trading can be mentally exhausting, and when you're stuck in a chair for so long every day, it really takes a toll on you. So go outside, go for a run, just be active, take care of the physical self. Uh, Sermon over. Let's take a look at gold. It's Monday, so that means we are going to start fresh. We're going to take a look at the monthly chart, drill down, and see what we're looking at for the week. So what I've got for you right now is our monthly EQ that we've been watching for a little while. Now, if you've been following my videos or chart guys in general, you know that EQs generally break very nicely, and they've got some well-defined levels. And often we'll find that the closer in range our highs and our lows are, it's often indicative of what direction the EQ is going to break in the end. In this case, we can see that the bulls have consistently been pushing up very close to the previous ranges on these EQs, which suggests overall they have more strength than the bears do. We've got quite a bit of range between 1046, 1122, and 1160 here, and you can see that the range is nice and tight for the bulls. So that has me cautiously optimistic that the bulls are going to break out of this EQ. We'll see how that goes, but we need to follow what we're seeing first, and that is monthly equilibrium. We have movement to the downside, and if we just follow the percentage gains and losses through these EQ patterns, I would put my next level around 1193. That's just based on sight alone, no real technicals behind it. That's where experience comes into play on technical analysis and these sort of far out forecasts, because this could be months away before we potentially hit that level, or we're going to break out of this 4-hour wedge and go bull, and we'll get into that in a little bit. Let's take a look at the weekly time frame, see how this plays out. There is our monthly EQ in the weekly format. We see major resistance at 1366, a push up to 1346 in the last few weeks rather, and now we are testing, and we're range bound between our EMA 26 and EMA 12 on the weekly time frame. Let's zoom in a little bit here, and that is what's going on. So we've got our red support, the EMA 26, and we've got this nice upper blue line. This is our EMA 12 acting as resistance. So we can see that we've dropped into this threshold. We bounced around. We tried to get out. It was rejected. We broke below. That was rejected and recovered right back into this range bound area. So this is going to be indicative of what's going to happen in the short term when we close above or below these two lines. And it gets even more apparent when we go into the daily time frame and the 4-hour time frame. We can see that we are in a little bit of a wedge shape. So let's go back to the weekly. Let's draw in our levels here on our EQs. So I'm going to turn my magnets off, and it's just going to be a rough level here based on where our two lines of support and resistances are right now. They're not going to be exact, but this is good enough. And let's go to the daily time frame and see what we're looking at, keeping those things in mind. So here we are range bound between those two levels. And if we go to the 4-hour, I think there's more clarity on the 4-hour time frame. Maybe not, maybe not. Things are changing. Let's just draw it in for simplicity's sake. We're going to draw in what I believe to be the descending wedge pattern. And I'm going to change the color here a little bit, make it easier to see. Let's just call this white. Nice and clear. We draw our next trend line. And I may have drawn this for you a few times on different time frames, but the idea is the same. We are in a descending wedge on the daily time frame. We are seeing these converging lines, and when you get converging lines, you get consolidation, and imagine a spring building up the pressure that is going to have to be released. And when it gets released, it breaks in the direction of, breaks in the direction of whatever direction it breaks in. But when it gets above one of these supporting lines or the resistance lines of this descending wedge, it tends to move very violently, and it can be a very, very good play. Descending wedges have one of the best probabilities of a profitable trade, and I believe they're probably only next to bull flags, in the sense that a bull flag has an amazing push, consolidation, and then a final push. These guys, you're suppressing something. The bulls want it to go. The bears are not quite as strong as the bulls, and eventually something breaks, and then the bulls run because that selling pressure has diminished. So that's what is potentially happening here on gold on the daily time frame. Now for that to happen, what we need to see is our bulls to get back up above our EMA 26 on the weekly time frame and the daily, and close above the trend line. So we have quite a bit of room to go here. We are not sure when or what direction that's going to break, but given the fact that we are leaning slightly bullish on the monthly EQ, and that we're range bound on the weekly time frame, I'm keen to see if we get a bull break on the daily time frame. And yes, your ears do not deceive you. I did say keen to see. I'm keen to see if we get a bull break of this daily descending wedge, which if we do get, would put us close to potentially getting up to testing our resistance at 13, what's this high? 1324. I don't know if it's got legs to go all the way back up to test the new highs around 1346, but I would like to see a pretty good break of this wedge. I love wedges. They work out so effectively for us, and I want to see that happen here today. So let's go back up a little bit. What has to happen for that to work out? Well, what we need to see is these 4-hour bulls continuing this uptrend, potentially having set this new higher low. So what we need to see them do is come back, a break above 1289. It's going to put them right in the area of that supporting or the descending wedge trend line. And what we're going to do is potentially buck up against that, come back down, set another low, higher low, come up, test it again, and we can do that multiple times. And we want to get the price action comfortable being around that resistance line, and then once we smash it, our RSIs are going to be in nice position for an extended run, and we see a lot of continuation and good profit on that pattern break. In the opposition, what we're going to see is going to be a potential trend change on the hourly time frame. That's what we're going to look for first. We're going to see a loss of 1278, then 1274, and ultimately 1276, and that is going to create a failed break or a bear break of our descending wedge. So we can break bear on these. It's not as common as a breaking bull, but that is what it would look like starting on the hourly time frame if this pattern is not going to hold for the bulls, and we're going to see more downside following this converging descending wedge pattern. That's it for me today. I hope you learned a little bit of something, and I just want to say I'm really grateful for you watching. If you made it all the way to the end of this video, I am grateful that you let me be a kind of guy that gets to make these videos. That's it.